Hello Wolfpack, back here on Bitcoin again today. We just had the CPI numbers in the United States release here, and up from the last month. They're up to 8.6 year on year from 8.3 year on year. And so it seems that, Jerome Powell, the chairman of the Federal Reserve, is going to be forced into a position in which he can't do anything else other than raise by at least 50 basis points. There has been speculation on Twitter over the last few days that we could even see a surprise 75 basis point hike. Just to give you an example of how out of control the situation is getting with inflation, I mean, we're quite literally seeing bond yields return to levels we have not seen since February 2019. And what that means in regards to interest rates is that interest rates right now are 1%. As per the bond yields, right? This is as per the bond yields. This is what the market is predicting. We are 1.5% undervalued in interest rates as per the last few hikes, right? So as per the last hikes in 2019. Just to kind of clarify, interest rates are dramatically, almost more than half of what they should be as per the market prediction right now. And so a 25 basis point hike would be an absolute softball that would be severely damaging to the economy, severely damaging the middle class especially, and allowing inflation to go on for way too long. They are basically forced into a corner in which anything other than at least a 50 basis point hike is completely illogical. There is an argument to be made that they could even make a 75 basis point hike or even a 100 basis point hike. Obviously that would shock the market. It would absolutely bring turmoil to the traditional markets, and that's not what you want, especially as we come up to an election in the US in November. But at this point, it's getting severely out of control, and they need to make the right decision here and keep hiking those interest rates rapidly. Otherwise, we're going to see crazy devaluation of the US dollar. I mean, past the point of what we're seeing right now, 8.6% year-on-year inflation. Absolute insanity here. Let me bring up a inflation chart for USA. Let me just get it up here. I think we're on the crypto. That's why it's not coming up. Inflation USA. We can bring that up here. Inflation United States. Here we go. Let's see where inflation's at right now. Again, 8.3%. I don't think that's updated. It should be 8.6% currently. It will update soon, I assume. Again, we haven't seen this level of inflation since the 1980s, and at this point, it's pretty clear as market participants, we know this as crypto investors, that inflation is quite literally way higher than that. In fact, the reason why it's showing is not seen as a level since the 80s is because they've changed the method of calculating inflation. And so it's much more likely that inflation is currently levels we haven't seen since the end of World War II. Again, that's inflation at the highest level in 80 years by most economists' predictions. So crazy level of inflation, and the fact that we have a 1% interest rate right now, the fact that we have a 100 basis point interest rate right now is absolutely crazy. It needs to go much higher than that. And the reason why this is compelling, the reason why I'm talking about it is because we've seen the reaction of traditional markets at this point. We've seen how the traditional markets are reacting to these kind of interest rate hikes, right? Starting in December, which by the way isn't when interest rates start hiking, but it's when the Federal Reserve first indicated that they were going to move into interest rate hikes. Starting in December and January 2022, we've seen the S&P 500 top out, and some people would look at this chart and they'd say, it's a strong uptrend, right? It's just a correction. It's gone on a lot longer than the other ones, but at the end of the day, it's just correction. That's simply not the case. This is not a correction. It's actually the beginning of a financial recession, and it's quite literally, the end of the bull market in the S&P 500 for sure. You don't see this kind of price action unprompted. This is prompted by the interest rate hikes, and as I just displayed by the economic situation in the USA regarding inflation, interest rate hikes are going to continue happening, and even the Federal Reserve, which is meant to bring, who are kind of meant to bring as much optimism into the market as they possibly can, is saying that they're going to be raising interest rates until at least the end of this year and possibly into next year by 50 basis points a pop, right? So to act as though, this is a regular normal market correction and we're going to go up after this is completely irrational because it's actually driven by the fundamentals. And looking at something like the DXY, and actually before we even do that, look at the last 2 days. I mean, this is just leading up to the CPI numbers, and we can expect this downwards trend to continue because, again, interest rates will be hiked on the 16th of June, and the day after that, we have an options expiry, the largest options expiry in, I think, 6 or 7 years, maybe even 8 years. The fear in the traditional markets is not going anywhere anytime soon, and hence the fear in the Bitcoin and cryptocurrency markets is not going anywhere anytime soon. And this is part of the true real argument to be made that, hey, perhaps we don't even see a dead cat bounce here. We've spoken about it before, about how we might be seeing a dead cat bounce on Bitcoin that would take us to like 35, 36K, definitely possible. But perhaps that doesn't even happen. I mean, looking at the state of traditional markets right now and how correlated they are to Bitcoin, it's insane. I mean, if we go to the weekly chart on the S&P 500, which obviously is kind of, S&P 500 directly impacts what Bitcoin does. We saw 1, 2, 3, 4, 5, 6, 7, 8 red weekly candles in a row. We then saw 1 green weekly candle, and now we've seen 2 red candles. Let's look at Bitcoin. Let's look at Bitcoin, what it's doing on the weekly chart, right? Again, so exactly the same as the S&P 500. We've seen 1, 2, 3, 4, 5, 6, 7, 8, 9 red weekly candles low, and then 1 green candle, and now a red candle again. So extremely similar to the S&P 500. That just gives you an example of what the correlation is right now. The S&P 500, which is driven by the bearish state of the market in traditional markets, is going down, and it's dragging Bitcoin and crypto down with it. And if it continues to do this in the coming days, it's very likely that Bitcoin, which by the way is hanging on by a knife's edge to 28.6K, could just go down even further with it. We're seeing this kind of take place or kind of, further instill the point in the DXY. The DXY, which I've been saying is extremely bullish for the DXY, which again, let me just explain what it is first. The DXY, called the US dollar currency index, is basically a chart that measures the strength of the US dollar in relation to other currencies. And so when this thing goes up, it's generally bad for Bitcoin because it means the US dollar is getting stronger. When this thing goes down, it's generally good for Bitcoin because it means the US dollar is getting weaker. Obviously, with weakness in the US dollar, you're seeing people essentially sell out of the US dollar and buy into things like Bitcoin and buy into things like stocks. And so when people sell their stocks, they sell their Bitcoin, they sell their gold, they're essentially buying back into US dollar, which kind of plummets up, which kind of skyrockets the strength of a DXY. And so with this thing in a strong uptrend, with no signs of it slowing down even after a sharp correction here, and signs of making new highs here, we can say that it's very clear that Bitcoin is in fact in a very unfortunate position in which it's being thrown in between a financial fiasco going on in traditional markets right now, to the point in which its TA doesn't really matter too much at this point. Yeah, these support zones are still relevant. These triangles we're drawing, they're still relevant. But the point is, we're following the 4-year cycle in a way that every other short-term indicator is kind of just irrelevant. The only thing we need to know about Bitcoin right now, if we're looking at the macro scale, is that there is a 4-year cycle. We talk about it quite a bit. Let me bring up the 4-year cycle. There is a 4-year cycle on Bitcoin that is driven by the halving. Bitcoin is heavily connected to traditional markets. We are in a bear market as per the 4-year cycle, and we are further in a bear market as per the traditional markets, right? And so there is no reason at this point to believe that Bitcoin will do anything other than go down until this 4-year cycle is over, and furthermore, maybe even until the traditional market, bear market is over. I think a theory that I've been exploring in the last few weeks is the potential that, hey, obviously Bitcoin right now is pegged to the traditional markets, but maybe when the 4-year cycle bear market, as per the date range of the 4-year cycle, which is going to end in November, is over, we might see a depeg, right? Because we might see the point in which right now, just to clarify further, right now we are in a bear market, as I said, as per the 4-year cycle. And so regardless of whether this traditional market, bear market, was occurring, we would still be in a bear market right now on Bitcoin. Now, when we get to the point on Bitcoin where the bear market, as per the 4-year cycle date range, is over, even if the traditional markets are still in a bear market, we might start to see Bitcoin depeg, because the 4-year cycle might be stronger than the influence the traditional markets has on Bitcoin. I hope that makes sense. It's very hard to explain, but I'm going to be discussing that more in the future. But just to go over quickly, we do know what my predictions are, or most of you do know what my predictions are on Bitcoin. I think that Bitcoin will bottom out at the end of this year in Q4. The bear market bottom will be in Q4, most likely around November. I think that bear market bottom will come at around the 200-week SMA, or in the worst case scenario, even possibly at around 14K. But more likely the low 20K region, mid 20K region, somewhere around there, I think Bitcoin will be bottoming. So That's what we're looking at for Bitcoin right now. And then if we flip over to the daily chart, and there is a bit to talk about on the daily chart. We have these two critical levels. We've spoken about it quite a bit, 36.6K and 28.6K. Obviously, those are the two consolidation levels. Let's go to the daily. It's for 2 day. Let's go to a daily. And we can see that we have also this downtrending yellow line, which is kind of the resistance pattern that we're looking at. And the apex of that downtrending yellow line is sitting at the 22nd of June, which means that sometime between now and the 22nd of June, Bitcoin will be making a major macro decision on the next direction of its movement. Now, we can actually further consolidate that down and say sometime between the 16th of June or 17th of June and now, so sometime within the next 6 days, Bitcoin will be making a major movement. Why? Because as I said before, the interest rates decision will be happening within the next 6 days, and hence that will bring volatility in the market that will most likely push it out of its consolidation structure. So, like I said yesterday, we've got a week left. Today, it's a day further. We've got 6 days left until Bitcoin makes a move. Anywhere within now and 6 days. So not 6 days left, but within 6 days we've got. So literally any hour now, we could be seeing, within the next week, we could be seeing Bitcoin make some sort of dramatic move, either up or downwards. And the traditional markets are certainly not holding back. They are indicating that it could very well be downwards. We could very well see the 200-week SMA a lot earlier than expected. But I would like to remind you that just because we go to the 200-week SMA, that doesn't mean the bottom is in, right? As I said, the 4-year cycle macro bottom predicts November. Now, we could get to the 200-day next week, 200-week SMA next week. That doesn't mean that's the macro bottom, though. We could go lower and reach the 14K bottom in November. So it's very hard to tell where the actual bottom will be. All we need to rely on is the date ranges. And the date range suggests that it's nowhere near at this point. It's still 5 or 6 months away, or at least 4 or 5 months away at a minimum. And so zooming up, what we can see actually recently, or more recently, is that on the 4-hourly chart, Bitcoin, we talked about this pattern extensively in yesterday's video. Bitcoin has actually lost this symmetrical triangle structure. It's broken it to the downside. And if we're taking a measured move from that symmetrical triangle structure, this is the pink structure I'm looking at here, from the top to the bottom, and apply that to the breakout zone, we are actually targeting 25K from that symmetrical triangle structure, which is interesting because this drop down is kind of going straight into support. So it'll be interesting to see whether that support can hold. Again, I'm not entirely opposed to a dead cat bounce scenario. I have spoken about that quite a bit in the past. I think that a dead cat bounce scenario is definitely a possibility. In fact, if we're following what happened in previous cycles, let's go to that right now. We can see it on the daily chart. If we are following what happened in previous cycles during the bear market, we should see a dead cat bounce scenario. We have a 5-step plan that we made not plan, 5-step kind of, I guess you could say procedure. Let me just remove the 50-day SMA here. We had a 5-step procedure that we followed in both 2014 and 2018. That seems to be playing out very similarly right now. So we look at 2014. We topped out in the bear market, formed an uptrending line, consolidated on support below the uptrending line, bounced up and rejected off the green line, and then crashed down to the bear market bottom. The same thing in 2018. And if we were to do the same thing right now, we would be seeing a bounce from here to about 35K, a rejection at 35 or 36K, and then a bit more consolidation at 28.6K, and then finally a crash down later in the year. That's if we follow the plan, right? That's if we follow what happened in previous cycles. So that is what a dead cat bounce would look like if it does occur. And so as of right now, I think that regardless of what happens, in the next few weeks, regardless of what happens in the next month or 2 months, the point is there's not really much chance that Bitcoin can actually change the macro trend right now. Even if we bounce to 36K, heck, even if we bounce to 40K, there's nothing we can do. It's still very much a bear market, and the traditional markets are very much the nail in the coffin for that kind of scenario here. What we can look at a bit more is actually the hash ribbons. I don't look at the hash ribbons too much because I don't necessarily see them as the most logical thing to look at as a technical analysis, because the hash ribbons are based on the hash rate of Bitcoin, which is to do with the mining, and essentially it's to do with the fundamentals of Bitcoin. But I would like to point out the fact that the hash ribbons are printing a gray circle, which is like a capitulation circle. So it's kind of suggesting at this point that there will be a massive correction from this time region, not from this time region, but from this price region. Now, the last times we saw a gray circle on the hash ribbons, you'll notice, is during the 2014 bear market, around the same market structure we're seeing now. We saw a gray circle that gray circle was preceding a 50% correction to the bear market bottom. Okay, in 2018, we saw a gray circle right here. And again, let me just circle it. We saw a gray circle right there. And again, that was preceding a 50% correction to the bear market bottom. And we have just seen a gray circle again, which, if we're following the trend in any way similar to what we followed before, that could be preceding a 40 to 50% correction, or maybe if with diminishing returns, a 30% correction to the bear market bottom. And so this is what I mean with Bitcoin right now. There's so many different things you can look at, right? All of which are either calling for an immediate drop or a dead cat bounce and then a drop. There is literally nothing on Bitcoin that I'm seeing right now other than some, Elliott wave astrology that's not based in reality that suggests Bitcoin will go into a bear market. It's all bearish, right? Whether it's short-term bearish, short-term bullish, and then bearish, it's all macro bearish. And so people at this point who are holding out for a bull market at this price region need to wake up. People who are saying that, oh yeah, the bottom's in on Bitcoin at 28K, they need to wake up, quite frankly, because it's simply not the case. I mean, if technical analysis has anything to say for it, if the fundamentals of the macroeconomic situation on a global scale has anything to say for it, this will not be the bottom for Bitcoin. And that's just a dead reality of the situation. Now, I would be extremely surprised if I'm wrong with that. And honestly, it would take a massive, massive stroke of luck for a bull market to form here, because I can tell you right now, if I'm wrong with that, the market is wrong. I'm not wrong. The TA is very, very, very clearly indicating that there will be a lower, a macro lower low. And so for it to just bounce right now to all-time highs would be, inconceivably stupid, to the point in which I wouldn't even take responsibility for it. I think most people can understand at this point that a bull market is completely out of the question. Now, with that said, what would we actually need to be seeing in order to confirm a bull market, right? I know it's kind of, counterintuitive to what I just said, but what we need to be seeing, if for me personally, to say, okay, by some miraculous stroke of luck, Bitcoin's flipped upwards and it's gone into a bull market, where would I say, all right, it's actually a bull market for some reason, it's depegged and it's a bull market now? Well, we would need to be seeing a break above the 50-week SMA, because as of right now, the current trend on Bitcoin is break below the 50-week, you end up at 200. You break below the 50-week, you end up at 200. You break below the 50-week, you end up at 200. You break below the 50-week, the next step is for 200. And so if we broke back above the 50-week, that would be an indicator that we're not going to 200. That would be indicated, but that trend is over, and that would be an indicator that we're back in a bull market. Now, the 50-week SMA is currently at 44K, and hence, if we break above 44K, we're back at a bull market. Now, I don't think that's going to happen, but it's just kind of interesting to look at. And so, finishing this video off, what I would like to talk about is Ethereum quite quickly, and the fact that Ethereum has seen a very questionable candle close. So Ethereum, obviously the major support level on Ethereum is 1,700, as determined by this capitulation wick, and we've actually closed a daily candle below 1,700. So that could be a breakdown. It also could be argued that the actual support zone, as per this bottom here on June 21st, 2021, is sitting at 1,650, and in that case, it's still holding support. But given the strength of this candle, it wouldn't be surprising to me if Ethereum has in fact broken down. And Ethereum, just like Bitcoin, has a very clear consolidation line to the downside, kind of a compression line. And Ethereum, just like Bitcoin, is due to make a decision before July, sometime between now and July. And given the decision on Bitcoin is going to be made sometime within the next 6 days, I would also expect Ethereum to make a decision within the next 6 days. Again, that decision will take form in either a drop below 1,650 or a break above this uptrending line, and possibly a bounce to 2,300, 2,200. Depends where Ethereum goes. I don't really look into Ethereum too much. I don't really see the point. Bitcoin is the driving force in the market. Ethereum is just kind of like a driving force for the altcoins that you look at in the altcoin season. But as of right now, it's not really an altcoin season. And so, I don't really see the point of looking at it too much. But yeah, that's the situation right now. So 6 days until the big decision, or within 6 days until the big decision, macro situation is undeniably terrible. I don't necessarily want to make any clear predictions as to where I think it's going to go in the short term. Short term is very hard to say, but longer term, and certainly within a 2022 perspective, I don't think the bottom is in. So thanks for watching, guys. Now I want to look at BitGet before we quickly end the video, and I'll check that out right now. So BitGet Exchange, I use personally as a trader, full-time trader. I use Binance and BitGet. Binance for spot and BitGet for futures. BitGet is by far the best futures exchange. In fact, it has half the fees of Binance, and Binance is widely advertised to have the lowest fees. So it has half the fees of the advertised lowest fees in the game. Easily the best fees in the game, especially if you trade very often. Those fees can stack up. I know, for example, my friend Meguel Crypto, he had $3.5 million in trading volume last month, and out of that, this is on Binance, he paid $13,000 in fees, which is absolutely crazy amount of fees to just throw away onto exchange. If he traded on BitGet, that would have been around $2,000 in fees instead of around $13,000. The the decrease in fees there stacks up over time. And for that reason, I think this is, for that reason alone, I think this exchange is worth using. But on top of that, you have no KYC, meaning you can avoid your crypto regulation in your country, use this exchange no matter what. And in a certain way, it's beneficial for tax reasons, because if you don't have your identity linked to this account, obviously you're going to have to withdraw eventually and pay tax, but you can definitely, kind of push those taxes back into further tax seasons and use that capital for a little bit longer. So highly recommend BitGet Exchange. Moving forward, the Crypto Academy, if you want to take advantage of the bear market, the boring price action, become a trader. We have the Become a Trader 10-unit course. My friend and my fellow analyst, Mega Crypto, and I have created this course at the start of this year. It took about 6 months to create, 5 months, 6 months to create, working kind of day in, day out here. And we've created a 10-unit course, around 40 to 50 hours of content, 400 slides, 80 videos, 8 worksheets, and a trading diary. You're not going to get much more extensive than that. We have a trust pilot that has just launched, and so those reviews are going to start funneling in. I'll speak about it more in future videos, but if you want to learn how to become a trader, go to the website in the pinned comment below, and you can go ahead and check out the email and contact us here for payment information or more information on the course of what it looks like, etc. And then finally, if you want to become a VIP with the Wolves Crypto YouTube channel, go to my channel page, click the join button on PC, and you can see all the perks available here: trading signals, 2-hour video on market psychology, WOC weekly newsletter access, loyalty badges, custom emoji, prioritized reply to comments. The list is endless, and for the amount of stuff you're getting here, I mean, look at all this stuff here for 28 USD a month. Name one better value VIP group than that. You're not going to get it. That's absolutely insane. Thanks for watching. Hope you enjoyed, guys, and I'll catch you in the next one. Cheers.